Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers maintained control and the market pretty much balanced for the most part above the previous day's VPOC of 1943 and then made an upside break up to the 1948.75 resistance level where we're seeing a little bit of responsive selling coming into the market. So heading into the open, we know that we only have one important econ report, which is due in pre-market, the jobless claims number. And aside from that, we actually have a lot of econ reports out tomorrow. So when you take the whole context into account, with not really any main catalyst to drive the market big on the day time frame today, and the fact that ES is now heading into some stronger resistance areas, I think that it can pretty much limit the upside potential on the day time frame. Over the last few days, we've seen that the opportunity potential has been pretty decent in the market. At this point, I think there is a bit of a shift in the context, and the opportunity potential is a bit lower compared to the last few days. And with no econ reports really driving the market, and now the market heading into some better resistance, I think it does call for being a bit more cautious, being more conservative on your risk management, on your trade entry and trade management, and especially on the buy side, because now the market is a bit overextended to the upside, and the upside could be limited here to the overnight high or the 51 to 53 zone with a gap at 53.5, and that's important resistance. That's a spot where sellers could be pretty aggressive, and because of that, there's not a whole lot of upside potential left on the day time frame today. Tomorrow we could get some better moves, but heading into today, I think it makes sense for the buyers to be a bit more cautious and potentially even look for short setups as the market heads up into these better resistance zones. On the downside, we have the gap fill at 44.75, the previous VPOC 43, pre-market support 40.5 to 42.5, and given that again there's no major catalyst to drive the market, we could end up with a relatively balanced session today where the market simply trades within a range, and the upside could be capped at 51 to 53.5, and from there the market could simply balance within a range heading into tomorrow, where we have some catalyst to put in more of a directional move. So on the upside here, makes sense to be cautious on taking any aggressive longs. We can still look for longs on pullbacks, but even then, those setups do have to be read in real time, and the target has to be far enough to justify taking the long trade, right? So in the event that we get a pullback here down to 44.75 or 40.5 to 42.5, in real time, there still needs to be a market read where the market is relatively neutral and we're not seeing any extreme weakness in the market, or the internals are not really heading down into negative territory, because then we could get a bit of an extended pullback down to the bottom of the pre-market support, potentially 39.5, and in the event of some extreme weakness, even 35 to 37.5 has potential to be tested, but right now that's not the immediate support zone that's in play. Right now the 40.5 to 42.5 support is still intact, and as long as the market holds above it, buyers can maintain control, and we can simply balance at some of these higher prices, and then heading into tomorrow, we can get some catalysts that can put in a directional move. So on the day time frame today, the main upside objective was 48.75, which has already been tested in the pre-market, and above that we have 51 to 53, which is the next main inflection point. That's a spot where sellers could be fairly aggressive, and by the same token, if we slice through 53, that would also tell you that the market is actually stronger than we anticipated. So this zone is fairly important and something that we do want to pay close attention to. Up at 51 to 53. The expectation is for sellers to be active there, but in the event that the market actually slices through it, then you'd have to back off on any short ideas and be more conservative even on the short side, because then we could go up to 56.5, potentially a little bit higher. But right now the context really does not support a big upside move. The market is a bit overextended to the upside. We are a bit overbought here, so conservative long setup still makes sense, but any aggressive longs I think are going to be risky. And not to say that they can't work, but they are added risk. So you just want to be careful, entering the market at too high of a price where the target is only 2 or 3 points away, or an important resistance zone is only 2 or 3 points away. And then at the same time, we can still look for short setups at the 48.75, at 51 to 53, with 51 to 53 being the better spot to short the market and look for a pullback. If the gap is still open as we head up into 51 to 53, that would make it actually a better spot to short and look for a move down towards the gap fill at 44.75 and potentially even a bit lower. So right now, heading into the day, it is a bit of a mixed market. We know that the buyers have been in control and we've seen some decent momentum, but we are heading into some better resistance spots now where the momentum could fade and we could actually see some more aggressive selling come into the market, especially considering that the econ calendar is pretty light and Europe was relatively weak for most of its session. The other markets are also heading into some better resistance, so just makes sense to be a bit more cautious on the buy side, be a little bit more active on the short side as we head up into 51 to 53. So those are the main ideas heading into the open. Let's see how well the buy side can hold it up, and then let's see if the sellers can be aggressive at 51 to 53, and we will take it from there.